Hello and welcome to Business Incorporated. I'm Chimezi Obi Iwago. On the show today, Nigeria inflation falls to 11.31% in February. World Bank and African Development Bank commit $47 billion to African climate finance. Plus, Kenya court asks banking rate cap suspends implementation for a year. Well, we'll start off here in Nigeria as the country has posted positive inflation reading for the month of February as all the key indices finished the month lower than the first month of the year, beating some of the economist's forecasts. The Statistics Office latest data released today shows headline February inflation in at 11.31% year-on-year, reading 0.06% lower than 11.37% posted in January 2019. On a month-on-month basis, the headline index also eased to 0.73% in February. This is 0.01% rate lower than in January 2019. The composite food index fell by 13.47% in the month under review compared to 13.51% in the previous month, while core inflation stood at 9.8%, a tad of 0.1% from previous 9.9%. The report also reveals urban inflation better at 11.59% year-on-year in February against 11.66% in January, while rural inflation index was healthier at 11.05% against 11.11% posted in January. And to the markets now, here in Nigeria, the market was down 0.08% despite positive inflation figures released for the month of February. In South Africa, the JSE index was up 0.85% at intraday. Egypt is closed today for the weekend, ended in the red territory on Thursday, down 0.89%. Trading in Kenya finished positive on Thursday. In the Middle East, markets are closed on Friday. However, on Thursday, Abu Dhabi snapped back some of its losing streak from 10 previous consecutive sessions to close at 3.39%. As First Abu Dhabi Bank, the United Arab Emirates' biggest bank, surged 6.5%, and Emirates Telecommunications added 5.2%. Qatar's index rose 2.14%, with industry Qatar climbing 3%, and Qatar Islamic Bank up 3.2%. In Dubai, the index fell 0.99%. Dubai Islamic Bank lost 6.5%. Saudi Arabia's index was up 0.66%, with Al Rajhi Bank gaining 0.9%. And in Europe, stocks were slightly higher on Friday morning after UK lawmakers voted to delay a potentially chaotic exit from the European Union for at least 3 months. Let's talk to Paul for details. Hello, Paul. Good afternoon.
Good afternoon.
Now, what news is filtering out of the EU headquarters in Brussels regarding last night's UK Parliament vote to request for an extension to March 29 Brexit deadline? And how is the market trading this latest development?
Yeah, well, what's important to know is that an extension will only be granted if all EU 27 member states agree to it unanimously. So every single member state has to say, yes, certainly, we will grant you permission to delay this. And then, yeah, they need to figure out if they can find a common stance. Earlier this week, it didn't look very good for that. We heard from Emmanuel Macron, also Mark Rutte in the Netherlands, and Pedro Sanchez in Spain. They were taking more of a hard line and saying, we're not going to grant you a delay unless there is a really, really good reason for that. Now, what could that reason be? Potentially a second referendum, but the UK Parliament also voted not to have a second referendum. So the alternative is actually taking a deal. And this situation is making things better, surprisingly, for Theresa May. It now looks more likely that in a third attempt, who would have thought, in a third attempt, attempt to bring her deal through, yeah, the situation might actually look better, because crashing out is in nobody's interest, as the UK Parliament has stated. The markets are reacting positively to this, because crashing out of the EU seems less likely now, and people are betting more on the fact that EU will allow the UK to take some time, take that third vote, actually do agree to a deal, and then get a little bit more time to get the legal stuff going, and actually prepare for this Brexit. It's the alternative to falling out, to crashing out, and so market is reacting positively. Pound sterling has been gaining all week, and markets here in Europe are all creeping up.
In another development, the U.S. Securities and Exchange Commission has charged Volkswagen 2 of its units and former Chief Executive Martin Winterkorn with defrauding U.S. bond investors. Can you flesh up the story for us?
Yeah, so the claim is that Volkswagen gave out asset-backed bonds in the number of 13 billion during the time of April 24 and May 20. April 2014 and May 2015, when it says senior executives already knew that 500,000 diesel cars that were rigged were driving in the U.S. And so it's alleging that this is that Volkswagen made money off of these bond sales that it shouldn't have, and should pay this money back. How successful this lawsuit is going to be, though, that's a question, and it's a question that will depend on the kind of evidence the SEC will bring forward. It concerns one of the main questions, and that is, when did executives like Martin Winterkorn really know? Prosecutors in the U.S. in the past year have alleged before that Winterkorn knew by May 2014, so that would be in that time frame. But that is unproven so far. And Volkswagen also says, well, it doesn't really matter when Winterkorn knew it. He is not involved in any bond sales, so that wouldn't even play a role. Overall, Volkswagen has been, well, bleeding due to the Dieselgate crisis that's now been going on for years, since 2015 now. It's paid $25 billion in fines and in buybacks, and that is a lot more than the company originally thought it would have to pay. In 2015, it expected total costs of $150 million. Now it's $25 billion, and it might be growing.
Now, in another corporate news, UBS has made less money than previously expected in 2018 because of a surprisingly high $516 million tax fine in France. Now, the bank is facing another fine in faraway Hong Kong that comes with more trouble for its day-to-day business. What would all these mean for the trouble? What would all this trouble mean for this big bank of Switzerland?
Yeah, so the case in France has become more costly than expected. Here, it is apart from this fine, primarily hurting in terms of the bank's image, because here it has helped wealthy French people to hide their money from the French government, helping in tax evasion. So the court says. The bank still says it did not do any of that. It stuck to legal frameworks. In Hong Kong, it's not just a fine. It's even worse than that, because the fine has come because UBS didn't do its job right in a core function of a bank. UBS is now the first major bank to get barred from leading a company public. It has not done its due diligence in public IPOs in the past, and for the next year it will be banned from doing so in Hong Kong. Now, that's important because Hong Kong has been the #1 place for taking companies public in the past year. In Hong Kong, there were raised $36 billion in the past year, and so that's a lot of potential money for UBS to be made that is not going to get its hands on. The Securities and Futures Commission in Hong Kong has been cracking down on banks after a series of scandals with newly traded companies, and so that's why UBS has slapped with this fine and this 1-year ban.
Sure. Well, Paul, let's just say thank God it's Friday. I'm sure I'm going to see you again sometime next month. In the meantime, enjoy the rest of the weekend. In Asia, markets were mostly higher on Friday as investors reacted to the Bank of Japan's monetary policy decision, as well as overnight vote from UK lawmakers that could potentially delay its Brexit from the European Union. In Japan, the Nikkei 225 retraced from its gains, but still rose 0.77%. South Korea's Kospi was 0.95% higher. Hong Kong's Hang Seng climbed 0.82%. Chinese mainland shares were up. Shanghai Composite was up 1.04%, while the Shenzhen Composite added 1.42%. Australia's ASX 200 was near flat at 6,175 points. In the U.S., stock index futures traded slightly higher on Friday morning as investors monitored progress in U.S.-China trade talks and reacted to the latest Brexit developments. At around 3:10 a.m. Eastern Time, Dow futures traded 78 points higher, pointing to a higher open of more than 78 points. Futures for the S&P 500 and Nasdaq were also seen relatively upbeat. Market focus is largely attuned to global trade developments as sentiment improved on a report that more progress has been made in talks between the world's two largest economies. And away from the markets, back here, a United Nations Environment Assembly meeting being held in Nairobi this week is considering whether to start assessing and setting rules on technologies that could pull carbon out of the atmosphere or block some of the sun's warmth to cool the earth. Delegates have been debating a proposal from Switzerland backed by 10 other countries to begin examining geoengineering technologies, which bakers say could help fend off the worst impacts of runaway climate change.
Adopted. The proposal could lead to the highest level examination yet of the controversial technologies, which have gained prominence as efforts to curb greenhouse emissions fall short.
This UN Environment Assembly has decided to take on the most pressing environmental challenges in generations, steadily, committed, united, and determined to seek a sustainable path for future generations. This is the moment in time that will define us. We have the scientific evidence, we have the policies. Now is the time for action.
Opponents say the technologies present huge potential risks to people and nature and could undermine efforts to cut emissions, not least because many are backed by fossil fuel interests. Businesses that make products which promote sustainable development were invited to showcase their innovations and join in discussions away from the main hall.
Of course, the environment is key to any and everything that we do. For us as an enterprise and what we do, we have a global problem on our hands. Water hyacinth is not just a Nigerian problem, it's not just a Kenyan problem. We have 50+ countries in tropical and subtropical zones that are affected by water hyacinth infestation. And I think this is a good platform to showcase that, you know, the same way we look at things, there's a hashtag clean seas, there should be a hashtag water hyacinth transformed, whereby, you know, there is a concerted effort to look at how we can actually transform this renewable resource into beneficial use on a scalable level.
Environmentalists are pushing for rapid slashing of emissions through the use of greener power, preserving forests, and similar measures to promote sustainable development and combat global warming. Nitino, a Kenyan who makes leather products from fish skin, also exhibited his work at the conference exhibition space.
In the meantime, World Bank and the African Development Bank have pledged to commit more than $47 billion by 2025 to help African countries tackle the effects of climate change. Many countries on the continent, especially those on the coast, are among the most vulnerable to the effects of climate change, such as rising sea levels and coral reef deterioration. The World Bank has pledged $22.5 billion for 2021 to 2025, while African Development Bank is committing $25 billion to climate finance between 2020 and 2025. After the break, Standard Bank of South Africa plans heavy job cut, plus update from the Nigerian equities market. Stay with us.